Hey, it's Ben, and this is the Rareliquid podcast where finance meets the future. We cover money, careers, and how AI is changing both. Today, we're speaking with Alessia, who graduated from Columbia, started her career at Evercore New York, and is now a growth equity investor at Insight Partners. She focuses on vertical software and tech investments and thinks every day about which businesses will survive and thrive in a world being rebuilt by AI. Now, before we get started, if by chance you're tuning into this episode and are interested in breaking into private equity, you may want to check out the PE Investing Certificate program being offered by Wall Street Prep and Wharton. This program is sponsored by top firms like Blackstone, Carlyle, and KKR, and over 8 weeks, you can learn at your own pace through this online course that's taught by Wharton professors, Wall Street Prep's PE program director, and real PE investors, including David Rubenstein, the founder of Carlyle, and Martin Brand, the head of North America PE at Blackstone, who will cover topics like the PE deal process, valuation, how to think like a private equity professional, and more. By completing this program, you also unlock access to the alumni member database, fireside chats with PE investors, and exclusive networking events with the world's top private equity recruiters. This program runs 3 times a year, and be sure to use my code rareliquid to get up to $500 off. I'll leave information for everything discussed in the description, and with that, let's go into our chat with Alessia. All right, Alessia, thank you so much for joining, and jumping straight into it, can you actually just first give us an overview of your background?
For sure. Thank you, Ben, for having me. So nice to meet you. And I feel like when I was going through the banking recruiting process, I was watching your video. So it's a great moment to come full circle. But yeah, as you can probably tell from my name or sometimes a bit of my accent, I grew up in Italy in a city called Turin in the northwest near the Alps. Born and raised there. And then after that, I kind of moved around a little bit. I lived in Vancouver in Canada. I lived in France near Paris, and then kind of like settled down here in the US. And I've been living in New York City for about 5 years. I went to school in the city, got a degree from Columbia University, and then kind of decided to stay. Went the banking route, worked at Evercore in investment banking, M&A. And now I work at Insight Partners in kind of growth equity tech investing.
Great. And you have moved around quite a bit. And so do you kind of feel like that has shaped the way that you operate kind of in the working environment at all? And how has that kind of played into your working life?
I'd say it shaped, I guess, 2 ways. The first one is the curiosity. Just from a personal standpoint, whenever you're moving around so much, you kind of like you need to put yourself out there, and to put yourself out there is like asking questions and getting to meet new people, new culture, different languages. And I think that worked very well, like work-wise, being intellectually curious and learning about new things. And the second thing is more like pattern recognition across markets. Even though I lived all in what are called like Western economies and Western countries, you realize that once you kind of go a layer deeper, it's much more nuanced, and there's some local kind of like let's say aspects to every different countries that change. And so now when I look at investments between the US and North America and Europe and South America, I'm able to kind of play both, see the patterns across, but also kind of understand that maybe a go-to-market solution in the US wouldn't work as well in Europe. And obviously on top of that, I speak 4 languages fluently. Oh, cool. And so that helps a ton.
And I guess like shifting a little bit more towards your professional background of, you went from undergrad straight into banking, and everyone does it for a variety of different reasons. I'm curious as to, like, based on your background coming from like an international one, like what is it that from your life experiences kind of pointed you to banking?
So I feel like I had a bit of a distorted image going into banking, but the reason why I went into banking was like, I want to kind of learn that financial skill set and kind of technical skill set, because it'll be super helpful no matter what I want to do in business. And unfortunately, like I see it every day, even now, like when I talk to founders, etc. Like finance kind of touches everything. And I think it's probably one of the best jobs out of college in terms of exposure. I know there's a lot of other jobs out there that like sound really cool on paper. And when I was back in school, I was like, this sounds great, but because they're not, say, top of the list in terms of priorities for a CEO, you don't actually get as much of their time. Versus like when you're doing like an acquisition or a merger or stuff like that, that's number one priority for CEO and CFO. And so you kind of like get to talk to them every day, be in the room and really listen how they're thinking through things. And I thought that was an incredible opportunity. And so that's kind of what drew me into banking. But yeah, I can tell you more what kind of kept me there.
Yeah. So, well, actually, I guess that is pretty on point. You know, having experienced it myself, you do get to be in the rooms with like C-suite execs because these deals are transformational, or they're very important milestones for any given company, especially for M&A. I wanted to actually ask for you then at Evercore, were you able to actually interact with quite a bit of like the C-suite execs? Because frankly, I don't know if, because elite boutiques, I think, do give a bit more responsibility to their junior bankers. Like for us, a lot of the times, like the C-suite execs, like it's not like I really interacted one-on-one with them a lot. So was it more like you got exposure, or were you actually also kind of interacting quite a bit with the C-suite?
Definitely. I think, and that goes kind of to the answer of like why I stayed in banking for as long as I did, is I was so fortunate. I love my time at Evercore, and I stumbled into it in the sense of obviously the bigger bulge bracket names seem more like shiny of like, oh, you know, Goldman Sachs and JP Morgan, et cetera. And at the time, I remember talking to someone who was a few years ahead and told me, yeah, I ended up choosing Evercore over Goldman because, you know, it's much more like technical learning and you'll come out and be equipped if you want to move into like private equity or the buy side, et cetera. And I was sort of confused at the beginning. I was like, why would you do that?
Yeah.
But thankfully, I kind of like followed our advice when it came time to kind of select kind of what offer to like choose from, and never looked back. I'd say in terms of Evercore has very lean teams, which I know in banking it sounds like very appealing, but it also means like you work a ton. Like honestly, it means you're gonna kind of like get worked. But at the same time, because of that, you kind of make it into the room. So like, I remember I was sort of in a special situation and I joined my group together with another analyst and he quit about 2 months into the job. And so I kind of was the only analyst and we were super busy. And so kind of like on week one, they staffed me on a project and it was like me, basically like a senior associate, a senior VP, and that's it. And we, on week one, we're talking to the CEO and the chief strategy of this company. And obviously, because I'm in the room, the CEO is talking to me like he thought she must be important. So he's like, I can tell he's kind of trying to like, you know, portray his company very well. And he's like looking at me. And in my head, I was like, oh my goodness, like this is crazy. Yeah. And so I feel like I had an incredible exposure in terms of really working across many different deals with the C-suite team, to the extent that like, when then you get to go to this like closing dinners, meaning at the end of a transaction. I remember someone asked me, it's like, oh, where'd you go to school? And I was like, oh, I went to Columbia. I was like, oh, you did your MBA there? And I was like, no, undergrad. And they started kind of doing a calculation of how old I was. And they were like, wait, what's your title? And because of like the amount of responsibility that I got to like very early on. And I think what also helped was, you know, I worked on a lot of like multi-billion-dollar transactions, but those transactions tend to have like bigger teams. And so you get slightly less exposure, or the CFO is busier. And so you work more with the senior VP of finance. And where you learn the most are those transactions where like, you know, a company might be like between 300 and 800 million of enterprise value. And you literally are working and calling with the CFO on kind of a day-to-day basis as you're like working through the model, especially in more complex type of modeling. And you really develop like a relationship. And I thought it was kind of crazy at the beginning that they were trusting me to sort of build the model and all of that. And then I was like, well, I'm the person who's closest to this. Like when you're in a room and they turn to you, if there's a, you know, question about like anything financial, I was like, this is what makes banking so great. Even now that there's all the AI tools and people are wondering, like, do I even need to go get like that technical skill set?
Yeah, I do remember with the closest interactions I did remember having with C-suite, as you say, were like the smaller deals. Like when I was working on, I think the smallest deal was something like $100 million. Then that's when I was emailing directly with the CEO from time to time. And I do remember that feeling like, dang, I'm only like 22 years old. Like, what do I know? But I guess like also, since you brought up kind of the AI tools, that's also like a very hot topic these days. I know you kind of just left banking about like 4-ish months ago. But when you were leaving, did you see a lot of AI tools being used at Evercore, and has a firm been kind of quick to adopt these tools?
So I'm really glad you're asking because I feel like I've been talking to a lot of friends that are in banking, in P, at tech startups, and like that's my favorite question to ask: is like, how much AI are you using? And I think Evercore started quite strong in terms of like adoption, but kind of slowed down a little bit. But in general, I see it so frustrating at a lot of these banks. Like some of these banks are, especially the Bulge markets, using only Copilot. And for anyone who's used Copilot, it's not a great AI tool. And I feel like one of also, like one of the many reasons I was like, the world is changing so fast. And I feel like banking is like struggling a little bit to keep up to pace when it comes to using these tools. And I find it so refreshing to be able to use these and really be at the forefront here at Insight. We're literally hosting an internal hackathon on Monday where we're all kind of invited to go and build our tools to kind of like automate workflows and build whatever works best for us. And there's a big culture of like go and embrace the change versus like what I've been seeing in a lot of like, especially the bigger the company, the slower the adoption of AI, which is really sad because I'm sure you spend a lot of hours that late at night where now you're like, oh, I wish I had this tool. And, I feel like now that the tools exist, it's like heartbreaking to see people spending a lot of hours.
Yeah, definitely. I mean, I remember in particular for us, strip profiles and company profiles where we're pitching or need to show a list of targets to a potential buyer. And then I remember it was like mind-numbing work. You're just going onto company websites and then finding their management teams and all of that, and then just like pasting it into it. And now you can kind of like populate a lot of that. And so I guess like, first of all, it's interesting that you say that you guys have like an internal hackathon. Does that mean like literally you and like your other coworkers are kind of vibe coding or like using Claude Code or something to create something?
Exactly.
Okay, cool.
We did had a hackathon at Evercore as well. So like when I tell you like Evercore is a little bit more at the forefront, I'd say, compared to other banks. But it's just different. It's like the bigger the company, the more red tape there is. And I think if you're smaller, you're more nimble, and it's so much harder to kind of like literally ship products. So you'll see everybody's full of ideas and excited to kind of like partake.
So when you were at Evercore, or from discussions you've been having over the past few months, then because a lot of times I think people or our audience wants to actually know like how exactly are bankers using AI right now. And I know it sounds they're limited based on the tools that they have, but can you maybe like walk us through some examples of maybe how you used it or how you've been hearing it being used?
Yeah, definitely. And considering that I feel like a lot of the skill set that I developed in banking, I still use to this day. So I can kind of tell you both how bankers are using it and what else they could be doing. But basically, I'd say a lot of people are using AI just to produce, more written content, for slides, or a lot of it is super helpful, even just research, like someone senior says like, what do we know about this space? And so like now in very few seconds, you're able to kind of get an overview of an industry or getting an overview of a company. So that's super helpful. Of ingesting like a ton of documents and kind of getting a summary of them. Like all of those things are very helpful. And I think quite a few people have been using them. I think there's a big potential for automation of repetitive tasks and of material creation. So material creation, I'd split into two. One is more like the PowerPoint, like what are we putting on a slide? And I feel like that should be 100% automated. Like an analyst should not waste any time on that. I think I was particularly lucky that during my time in banking, we were so busy that I kind of spent majority of my time on live deals. And even on those live deals, I kind of carved out myself as a space as like, the modeling person and the person that was leading kind of the financial. And so I spent a lot of my time in Excel more than PowerPoint, for which I'm very grateful. But ideally, no banker should really spend time in PowerPoint other than kind of like deciding the macro ideas of what are we trying to show. The other point is Excel. And that's where I'm kind of like, I'm curious to hear your take on, if you've never built a model yourself, you're not going to be able to audit someone else's model. You're not going to be able to question their assumptions. And so I kind of feel like even though there are now tools that allow you to build models, you kind of want to sometimes go through the manual process yourself because you're not going to learn otherwise. And because you kind of need to develop your own template. Like there's always been templates in banking that you can start off from, but everyone makes their own tweaks and like the way they like it. And so that's, I think, where the value add is like you have your own template, you have your own way of doing things, and then kind of AI tools can come and automate the more manual stuff. But I think there's still a lot of value in like the framework around that. I don't know.
Yeah, no, that makes a lot of sense. I think this is like it's going to sound like an off analogy potentially, but my friend who was in the art world, he said something a long time ago was about how sculptors are no longer as great as they used to be in, I don't know, like the Renaissance period. And then to my head, I was like, oh, but there's so much more knowledge now. I bet like if people wanted to be really good at sculpting, like, and making something out of marble or something, they could be. But honestly, I could be true. Like people there are things that are like lost arts, literally, right? And I think for financial modeling, it'll be interesting as well to see if that becomes kind of like a lost art in a sense too, where maybe in the future analysts, when they're in the middle of a fire drill, would they rather actually, if they're just starting at the desk, learn how to build an entire model from scratch and be super slow, or will they use the AI tools that are super fast and then kind of make tweaks, and that's just how everyone learns how to do it from the get-go? I do think that there's a ton of value of being able to doing everything manually on your own, because then if anything breaks, then you know where to look essentially, versus like if everything's automated from the beginning and you don't really know, then it's hard to ever really like find those mistakes and stuff like that. So, but I'm guessing it sounds like then because I've been like streaming DCF videos here and there, and then like building out like models using some of the different Excel plugins, Excel AI plugins. And I found them to be just kind of like okay. Like I haven't found, it's great at scaffolding kind of and like building out structure very quickly, but I haven't found it where there's still a lot of like mistakes and issues. So I'm guessing it sounds like maybe in at the desk when you were at Evercore, like how much of the Excel AI tools were you using on the job?
So because the landscape is changing so fast, there was no Excel plugin when I was
okay.
I'm still in Excel a lot, even now. So I can tell you like how I use it now. I'd say it's interesting. I think you can split into two. AI can be really used at building that scaffolding that you were talking about, both for slides and for Excel, when you're someone that like doesn't do it every day. So like I see a lot of friends who are like, I don't know, marketing or anything, and they'll just like ask AI in 5 minutes or create them a presentation via Gamma or something. Or like people that are not in finance, and they'll be like, can you build me a forecast? And so AI tools are great for that. But if I were to come as a banker or as an investor, I look at these and I'm like, this is so high level. This is not working. What I find it super helpful with is actually, I come up with the framework and the scaffolding. Sometimes it's like prior models that I've built myself. Sometimes I kind of like, I have a clear idea of what I want and how I want it to flow. And then I'll be very prescriptive about what I tell it to build. Or I might build the scaffolding myself, and then I might kind of do tweaks much more quickly. So say, I feel like a classic banking thing, or in the general, in the world of finance, sometimes like, numbers get updated, there's a new line, there's some more detail around cost, etc. And all of those changes take time. But you kind of, what you wish is like, can we implement a change and get the insight quickly so that then we can react and tweak the assumptions? And I think AI is super helpful at automating that and kind of like helping with that. One thing I found it to be super bad is formatting, which is what drives me insane because I feel like formatting should be all automated. There's no value. Like as a banker, you want it to look very nice and we're all very picky, but like none of us should be wasting our time doing that. And unfortunately, AI is not there yet.
Yeah, I've noticed that too. I think especially, I actually want to know what tools you use because I've used Claude and Excel and then TraceLight. I haven't used ChatGPTs too much yet, but I actually found TraceLight, I'm not sure if you've used it, the formatting to be like a little bit prettier in a sense. But then I know like Claude, for example, has a very like AI looking format. I think you can adjust it with like Claude skills and stuff to make it similar to your format. But it requires some work.
Yeah.
For you though, like what tools have you been using for the PowerPoint side and the Excel side?
Definitely. So initially we used a lot of ChatGPT. Obviously it came out earlier. Like I think I've been using AI tools since like at least 2023. So, and at the time ChatGPT was the super basic. Like you didn't even want it to create any external file or an Excel or anything. And if you create, it'd be all hard coded. And so it's like we've come ages from that. And then if I have to be entirely honest, I've noticed that like since kind of December, the quality of the output that it was producing was much lower than what Claude was able to produce. And so I've kind of switched to Claude, and I feel like I've seen a lot of friends who switched to Claude across industries. And I'm not a partner of Claude, so but I've started from Claude, then Claude Cowork, Claude Excel plugin, Claude PowerPoint plugin, and now even Claude Word doc plugin. I think the PowerPoint plugin is not as good. I think the Excel one is actually getting quite good. What I wish we had is like a Outlook plugin, and I think there would be so much advantage in automating a lot of that workflow, because a lot of like for any professional, no matter what the industry is, we spend so much time in email that it'd be nice to automate that. I'm kind of curious, do you use Superhuman or do you use Outlook?
So I use something that I'm not sure a lot of people use. It's called Spark. And the reason I use it is because it does have some Superhuman. Actually, I think all of them you can use your shortcuts and stuff, but there's shortcuts, but then also what I really need is a unified inbox where I can have, because I have a lot of different emails and I need all of my inboxes in one place. And when I tried using Superhuman a few years ago, it didn't allow me to do that. So maybe they do that now, but I just stuck with Spark.
Interesting. And that's what you meant about sticking with something. The world is changing so fast, but then you get used to one product and there might be like 7 other products in the market that are much better, but it's tough to kind of get people to change. And that's what I've been seeing in banking, like thinking about the partners and the higher levels being like, oh, how are we going to get them to use these tools? What was interesting is I was talking to the person who was spearheading the kind of AI revolution at Evercore, and he was saying, I really want to empower the seniors to use these tools because a senior banker that sends an email and say, can we look into this industry, sends like about 3 people on a spiral about creating, a 5-page stack, versus he can just go ask, ChatGPT or Claude or whatever other AI tool, Gemini, his question. And most of the time he'll get the answer that he wants, like so much faster within minutes, iterate, and it will save so much time. So like you kind of want to empower, senior people as well, not just juniors.
Yeah, that's interesting. I haven't thought too much about it from the senior side. And yeah, it'd be interesting if in some instances, like nowadays when seniors are messaging analysts because they haven't learned about AI, and then the analyst literally just like puts it into Claude or chat and then like is sending a response or something.
Yeah.
I think we'll definitely touch upon AI a bit more in this conversation. But I guess like going a little bit back into your banking experience it sounds like you had a lot of like positive experiences, but I know obviously it's also like a tough industry to be in. So was there anything that surprised you? It could be positive or it could be something that you totally like mismatched with your expectations.
I think I kind of, when I went into banking, I thought it was going to be the Wolf of Wall Street. That's kind of how I imagined it. Like people were going to yell and like be mean. And so I was so surprised that when I came in, it was like everybody was super nice, very sharp, and everyone, I'd say, very open to mentorship and to teaching you both junior and senior level. And I've really seen that across different banks and different people. Like it somehow it's something in the industry, and that's why it makes it a great job because you can learn a ton, and also because like given you're working like basically two normal full-time jobs is like every year in banking is like 2 years or 3 years of your like personal life and kind of career progression. So that was definitely something that surprised me a ton. The second thing was I also thought you were going to go into banking and only spend time in Excel, and that's not the case. Sometimes in a negative aspect, you might need to do quite a bit of PowerPoint, but sometimes it's also like you get an incredible exposure and access to the C-suite as we were talking. And a lot of the time, you're kind of a partner for them. I don't know how it works at Bulge Bracket. Like I heard from friends that like a lot of companies will choose Bulge Brackets because they can also get access to kind of debt and credit lines versus for Evercore's value add is like, we are an elite boutique and it means like, we're not going to offer you debt. So like, if you're paying us, you're really paying us for our advice. And so generally, when you're working with a company, you're not just working with them during the transaction, but you might be helping them outside, like, 2 years out of the transaction as they're trying to grow or like as they're thinking about the next thing. And so you have this continuous dialogue and conversation. And I thought that was so interesting to be able to see that strategic angle as well.
Hey, in case you're watching this video and are interested in breaking into banking, take a listen to this next minute. Otherwise, feel free to skip ahead. When I was JP Morgan's recruiting captain, I reviewed hundreds of resumes and selected students for Super Days. And one of the most common issues I saw was that candidates were making invisible mistakes and had no idea. The real problem with banking recruiting is that Wall Street never gives you feedback. You're operating in the dark and making pivotal mistakes during interviews, burning through your one shot at these firms while never knowing what you did wrong. That's exactly why I built the Banking Accelerator, a one-on-one mentorship program where we pair you with a former or current banker who matches your exact situation and goals. So whether you're interested in tech or healthcare banking or are coming from a non-target or international background, we'll pair you with a coach who has walked the exact path you're on, and we've helped students land offers at every bulge bracket and elite boutique bank you can think of. With our 3-step recruiting formula, you'll learn how to master networking, behaviorals, and technicals so you avoid the invisible mistakes that kill your chances. If you're serious about breaking into banking and want a clear step-by-step plan, check out the Banking Accelerator, which I'll leave a link to in this video's description. And with that, let's get back into the interview. Without maybe naming clients or anything like that, can you walk us through something more specific where you saw that strategic advice and really where you feel like, oh, this is why the client is paying for this advice? Like, can you give us an example?
Definitely. Without naming clients, my team worked a ton with this big company. We're talking about $40 billion of market cap, so like really huge. And we've been working with them for several years. And they're a tough client. They're a demanding client because obviously they're a bigger client. And I kind of somehow found myself to work with them a lot across different projects. And what I realized that when you've built that relationship over the years, you're not just, they don't come to you being like, hey, we want to sell this division, or hey, we want to acquire this. They come to you and be like, hey, there are public companies, like our price is not where we want it to be. What do you advise? Like, should we continue our share buyback program? Should we be issuing a dividend? Should we consider using this cash for M&A? Should we consider actually focusing on our core and so divesting a unit? And so you're doing a lot of that work that informs what the next transaction is going to be. You do it like almost a corporate strategy role to some extent. But I think the big difference is when I was choosing between careers, I was like, oh, consulting sounds really interesting. That's what I thought consulting was going to be. The issue I feel like sometimes with consulting is that you kind of come up with a super cool plan, but sometimes you don't need to execute on it. And so it could be the coolest plan, but then it might not ever get executed because, again, it's like on priority number 3. When you're a banker, the way it works is that you're kind of paid only if you execute. And so you can only whatever plan you're selling, it has to be a plan that can be actually put in place. And then you see it in action, and it's so satisfying from that point of view.
Yeah, I was also surprised because I was interested more in consulting before banking. So I did like internships and was like doing a bunch of cases and stuff. And then when I got into banking, I was like, oh, it actually seems like there's a good amount of consulting baked into banking as well. So because there's a lot of like industry overview, and you're like doing competitor mapping sometimes and things like that. And I wanted to actually, you were talking a little bit about like what surprised you in banking. A lot of times students and people who are going into it they're interested in also knowing about like some of the hardest moments that you personally went through. Like I can recall just very quickly, like working 28 hours straight on like a model for like a board meeting the next week. And that's probably on the very, very extreme end. That only happened once, but every banker kind of has gone to battle in a sense. And so what are kind of like your stories there?
The war stories. I think for me, what really, like, you work really hard in banking, right? And it's like you have these like super bad weeks, and some weeks can be better, etc. And I think you can see a lot of that in other jobs as well. Like anyone that works on a C-suite knows that like you can take calls on Saturdays and on Sundays. There's nothing like a protected time. You'll take calls when you're on holiday, etc. And this is very different than what I witnessed when I was growing up in Europe. Europe has way more emphasis on like work-life balance versus the US. But the big issue I'd say with banking is that you don't own your time, and so you don't have control on that. Like I think other jobs allow you to say, hey, I'm really tired. I'm going to go to sleep at 9 p.m. and I'll wake up at 5 a.m. and I'll get a head start on the day tomorrow. Or, hey, this Friday, my parents are in town and I'm going to take the Friday night off and then I'm going to work Saturday. In banking, unfortunately, you're answering to a client and they can be very demanding. And Murphy's Law, you always get things whenever everybody else logs off. Whenever someone is like 6 p.m. is like, oof, finally I checked it off my list. I sent it off to someone else. That's like a banker's night being ruined or a banker's weekend being ruined. So that I think was the biggest, I'd say, kind of personal cost, is that you might have really important stuff happening in your personal life and sometimes you have no control over that. But what I'd say, and maybe it was my personal experience, but I'd say in general, people, if you prove yourself and that you work hard and like there's this big camaraderie in helping each other out, like I'll cover for you when you have something important going on in your life, you'll cover for me. And I think that's kind of comes from the working in the trenches together. And that's why like a lot of the times people that have spent time in banking to like 20 years after, they're still really good friends because you're just generally spending so many hours together.
Yeah, I always say you see your banking colleagues more than like your parents, your friends, your significant other, your pet, like combined.
And there's something wrong with that. We shouldn't normalize it. And I think what helped for me, and I don't know if it was the same for you, was like most of my friends are actually not in banking. And so that was a great kind of like, hey, this is not entirely normal, because sometimes you kind of like live in this echo chamber where, you kind of normalize how crazy the lifestyle is. And so it was helpful to be able to see both sides. Yeah,
for sure. I do think that you get sucked into it. I remember the biggest stark difference when I quit was I didn't have to, like my personal phone had my work email in it. And then I was glued to that for like, 2.5 years. And then when I finally left, that was like the biggest change. Like, oh, I don't have to look at my phone like every single 5 minutes for an email. Ultimately you decided to leave banking and you're now at Insight, and you talked a little bit already actually about how you use a lot of your Excel skills basically in Insight as well. So you're able to kind of bring that financial perspective more strongly than maybe someone who came from like as a founder background or from consulting or something like that. And so I guess first off, like what made you want to go into venture capital? And then how have you seen over the past few months where you've been at Insight, your background in banking, how has that come into play?
So I'd say I kind of came full circle. It was great to help companies with transactions in banking, But unfortunately, even though you're like with some companies, you're kind of like helping them even in between transaction and giving that advice. I think a lot of the time you don't get to see what happens after. You've sold a company to someone, maybe a sponsor, and then it's like, okay, see you, never again. and most of the time, like that's kind of like a biggest accomplishment. You're like, oh, thank God, I'm never going to see them again. But what I wanted was like, I've invested so much time and kind of like I have a thesis and where they can go and see all that potential. I kind of want to continue working alongside them. And the beauty that you get to do that from the investing side is you kind of best of both worlds. You have all the finance background that can help you make good investments and execute on them. And then you have that more operator / consulting background, putting that hat on, that then helps you support those companies as they're growing. And that's also why I kind of chose growth equity versus like, private equity or, just pure VC, because I could combine the two.
And for those who aren't as familiar with growth equity, can you kind of walk through that a little bit more?
So I say growth equity sits in the middle of VC and private equity, where VC is you're pretty much making a bet into a person, into a founding team, sometimes an idea, but a lot of the times ideas change and pivot because you're obviously hearing feedback from your customer and the market, and there's not much financial analysis going on at all. And obviously having spent the time in banking, and I went into banking because I wanted that financial skill set analysis, I find that to be a little too early stage for me, at least at this point. And then I think the issue with private equity is you're mostly focusing on optimizing cost. And private equity, basically what they do, they acquire companies. They're using debt to acquire them, so they're leveraging. And then what they're going to do is that they're going to cut mostly cost. They're going to optimize their EBITDA margin, create a lot of cash flow to repay the debt. And then after that, they're kind of going to create returns on that. They're not creating as much value. And like what I wanted to be able to was like, oh, I'm helping be a partner for whatever company I'm investing in at the growth equity level, and I'm helping them grow. So grow their revenue and like build new products or expand into new geographies. And I'm creating real value there, I'd say. And I think that was the perfect spot where I could use kind of my financial technical background, but also, that operating angle.
Yeah, that makes sense. Like you kind of get the best of both worlds. And I do feel like whenever I saw some of my friends in banking go straight into like Series A investing or something like that, there could definitely be some mismatch there. It's like, oh, what do you really know about starting a company from scratch? Yes, you can like build a model, but then it's likely going to have so many holes. It's not going to, like really work when all the assumptions are going to be totally different and startups change so much. And then for growth equity, just to like go into a little bit more in your day to day, can you walk us through what like a typical day looks like for you?
Definitely. I wish there was like a typical day and even a typical week. I think if I could split my job, it would be like into 3 different buckets. One is more called sourcing, which is you're going out and finding kind of potential prospects or companies to invest in. And so meeting with founders, and I find that part super exciting. You get to kind of like sit with founders, hear about their vision. But there's also a lot of legwork that goes into that to be able to get in front of those founders. And we can talk more about that after. But at the venture level, kind of like companies are a little bit more desperate to get some capital. And so they kind of like will take calls from everyone. But at the growth equity level, like they're really looking for a partner that is not just going to give them capital to grow, but is going to help them grow and like give them advice and follow along with them in the journey. And so they're way more selective. And that's why you kind of really need to show your value add, which is also rewarding. So that's the first bucket, sourcing. Then you have an execution bucket, which looks very much like banking in terms of once you find a company, you're going to like run diligence, you're going to build a financial model, you want to like understand what the returns profile is, and then you're going to, execute on that investment. And then the last bucket is like, oh, now that I've invested in this company, how can I help them grow? And that's more like portfolio, management. That could be executing on more M&A and helping that company grow inorganically. That could mean a lot of different things depending on what the company does. So depending on what kind of stage you're at or what you're focusing on, my day will change a lot. So I feel like because of all three, I actually get to travel a lot, whether it's sitting on board meetings or meeting potential prospects at either conferences or like one-on-one, as well if I'm like looking at like a potential investment, maybe meeting management during a management presentation, etc. So like there's a lot of like face time involved, and that's why maybe it's reassuring that AI is not going to replace that.
Yeah. Do you find any of those three parts like the most fun for you?
I kind of like the mix of all three. I think that's what makes this job so complete. Because like, if I just wanted to do sourcing, I think I go earlier stage, and if I just wanted to do executing, I would have stayed in banking or I would have BNP. And if I just wanted to kind of do more the portfolio management, I'd probably be in consulting. And I get to touch all three, and that's like what I love the most is like you get so much exposure, and you get so much in depth because you're working with that company and you're supporting them as they go through different phases of companies' life.
Got it. And what about on the opposite end of the spectrum then? Like now that you've worked there and kind of see what the job is like, is there something where other people don't see? Is like, they might see like, oh, growth equity investing looks like so amazing. And then there's like some realities to it that, you know, like, oh, this is some of the unglamorous parts of the job.
Like, I feel like any job, there is some more like, not admin tasks, but like even sometimes you're, as you're thinking about like, how can I find companies to talk to? You know, like there's a part that is more like research heavy to try to look into that. And I feel like what really helps me is like that intellectual curiosity that we were talking about coming from traveling and moving countries is like, you can always learn so much. It's like, oh, what are trends that I could pick up on and then start looking into that sub industry and then talking to companies there. So like, I think the trick is whatever more menial tasks sometimes that feel like, oh, this is almost a chore, is like, what can I learn out of it? Same with like, some people don't love the portfolio management as much because they're saying you kind of like every time it's a different challenge. You might be helping someone with go-to-market. You might be helping someone with like building a new product or like building AI defensibility and all of that. I find it as like a great learning opportunity. It's like I'm almost getting to see under the hood inside the company. So that's kind of the philosophy how I approach this.
And in terms of where you sit in the firm, because now I'm sure it's been around for a while, it's quite broad, has a lot of different mandates. Can you talk a little bit about your role, like what vertical you focus on?
Yeah, definitely. So I'm focused on something that is more of kind of like a type of investing product, let's say, which is called structure equity or convertible equity, preferred equity. And I'm going to explain in a second. But basically, in like I'm focused on software, tech, AI, mostly what is more vertical inside of like industry, because that will have kind of like moat meaning defensibility. It might have proprietary data. It might be an embedded workflow. And so that's what makes a company kind of like a mission critical. And when it comes to the product and the type of investment that I focus on is the same as investing in common equity, which is what the usual, VC does, but with some downside protection. So you're investing in common equity and you're going to get some sort of kind of minimum returns, whether it could be 10, 15%. And this obviously works very well when for your risk profile. And especially now, I know a lot of people have been talking about the SaaSpocalypse and all of that, and we can chat more about it. But that really allows you to be more defensible, even in times that there's a lot of volatility and things are changing quickly. And it's also very advantageous for founders because they get to get a kind of a better valuation and get a better price most of the time. And at the same time, their incentives are aligned because they're like, I think I can grow this company. And so I'm happy for you to have some minimum returns because I think I'm going to knock it out of the park and I'm going to do so much better. So like if I can get sort of like a better price by guaranteeing you some minimum returns, I'm all in it. And so that kind of aligns our interest with that of the founder. and it ends up working out very well. And then you can get all creative with all the sorts of kind of structure that you can put on top of that. But kind of at the end of the day, we're very much growth investors.
Yeah, I worked on some convertible note deals as well when I was in JPM, and I always thought they were, from the investor standpoint, like such a great deal because it's kind of like debt. You get the returns, as you mentioned, but then you also have the potential upside of converting to equity. And I guess, yeah, from the company's perspective, I was a little bit curious why companies would do that. Or I guess, like, why would they do that versus just taking on normal debt? Is it that sometimes they can't have access to the same amount of capital or something like that, and so they would do a convertible note? Because why give the potential upside to a convertible note investor when you could maybe take out a bank loan and just pay the interest rate?
So I guess one clarification is like, we just do basically preferred equity. So like for us, our instruments are still equity. It wouldn't be like debt. And I know that sometimes that gets confusing with the convertible. But the reason most of the time, and like I would say a company, usually if they can't get a bank loan, so for example, they already have a bank loan, they're going to get some convertible debt on top of that because they need more debt. And that's just another way to kind of like expand their leverage, I'd say. But when they're looking for example, convertible equity, or like preferred equity, which might be an instrument that we are offering, the reason is they're not looking for debt. They're looking for a partner. Is it like for us? Is what I was saying is like they don't just need capital. They might need capital because they're trying to expand geography, or they are trying to do some M&A, or even just the sponsor or the founder wants some liquidity. So like they're looking for capital, but like they're looking for capital and a partner that can then help them alongside that journey. And that's kind of like the difference between like when you're a VC, you're writing just a ton of small checks and you own just a very small percentage of a company and you don't have that much say, versus when you're in growth equity, that's like the moment where like, hey, can you help me scale? I have this great product market fit, but like, can you bring the expertise to like make this a real company and have kind of like system and workflows in place? And because we work with so many companies, we have that pattern recognition and we can.
Yeah, that makes sense. It's like Shark Tank, basically. That's what you want, not just the money, you want like a partner. That makes sense. I've been watching a lot of Shark Tank, that's why.
Yeah, I never thought of myself as Shark Tank, but it's cool.
Well, in the sense where sometimes the people come in, they have a great company, they don't really need the money at times, but then they want someone there who has experience like scaling the company. So that's kind of what I meant. But you also mentioned the like SaaSpocalypse, which people inside the tech world, especially, I feel like have all kind of heard this term. Do you think that, or I guess, can you kind of like explain that a little bit, like what that term is? And then do you feel like it's overblown at all? Should people be worried, or do you feel like it's not something to be too concerned about?
So basically, SaaSpocalypse was a term that was coined probably like 2 months ago, around February. And what happens is Claude came out with kind of a new model and some skills on top of that seemed that could help start replacing, some function like finance, legal, etc. And so a lot of software stocks kind of got wiped in the public market in just a matter of a few days. And that's when they said software is that, SaaS being basically software as a service. And it's like AI is going to replace everything. And like any software companies will disappear. Obviously, like as anything, it's like very much like a clickbait, kind of like for newspaper. And it sent a lot of people into panic. I imagine it's probably like the dot-com bubble era when the internet came around. Or like, there's not going to be any more brick and mortar store and like everything is going to disappear. And similar, like I feel like in COVID, they were like, why would people ever go back to, in-person shopping? Everybody can do retail, like online shopping, etc. And truth is like, like things will change, but we're still human. Like there'll still be like a lot of kind of like, that aspect. So I'd say like, what's been really fascinating right now is kind of coming up with new frameworks when you're looking at companies and investments. And so the first question you want to ask yourself is AI going to help this company and kind of like, or is it going to damage it? And when it comes to software specifically, and say software is kind of all these applications that sit on top of some sort of infrastructure layer, the question that I've been asking a lot when I'm looking at new valuation, new investments is AI going to favor the infrastructure layer, or is AI going to favor the application layer on top? And based on that, you kind of will have a spectrum of outcomes. And you can get even more specific, but a lot of the time when you're looking at a company, you're asking yourself, does this company have moat? So does it have some sort of defensibility? And before it was like defensibility against competitors, and now there's also the question is like, does it have defensibility against AI? And so a big thing is like, how big is the switching cost for you to kind of like move from one product to another? If the switching cost is just like, oh, I have a contract with this company for a year, when my contract lapses, I can just move. Then what happens is that you're in this situation where it looks like from your metrics, it looks like you're totally fine. And you're not losing customers. But the real truth is that by the time your renewals come up, maybe some other AI tools or competitors have started to use other products that will either put pressure on you on lowering your prices or will cause for like your clients to leave. And so that is kind of like called like commoditized in place. Basically, it's like it looks like everything is fine, but it's not. You kind of are just on borrowed time. Versus if you have some real structural switching costs. So if ripping out your product out of a client is going to take maybe a year and it's going to like slow down productivity and all of that, then you're way more, insulated. So like that's kind of like a lot of the question that we ask ourselves. And obviously like if you have no switching costs, then like you literally have a category collapse and then, that's actually really problematic. But on top of that, what we are also seeing is before you were just focused on your relative, like on your peers, on who's around you. And now I think like you need to also look at what is like relative moat, meaning who's below you. So like the infrastructure layer below you, is it going to be able to replace you? And like, is AI going to be able to kind of like make your application on top of that infrastructure layer useless? Because maybe the infrastructure layer, is now using like AI agents that just bypass your application and just go straight to the data and information. So there's been a lot of conversation around all of this. And depending on where you sit in these different buckets, that's what's going to kind of like determine way more whether, yes, it's true, it's a SaaSpocalypse and you might not see the end of it, or whether you might actually do very well and the AI might help you kind of like grow.
Yeah. Would you be able to provide an example of a company maybe you've looked at or you guys have invested in where you can bring this like infrastructure layer versus application layer thought process to life? Because I think for me, like I don't think about AI in terms of infrastructure layer versus application layer. And I kind of like get roughly what you're saying, but do you have like an example with a company?
I'll give it more general example, like not something insight specific, but a lot of the conversation has been around, do we need Salesforce? What is Salesforce? And so Salesforce is basically a CRM. So you have a bunch of data, and then, people that are in sales, for example, they will go and they will access this data through the Salesforce platform. The truth is the platform is not that great, right? But everybody's always, Salesforce is super embedded into a company's kind of workflow and system that is so hard to rip out. The question is now, well, if I'm using agents as a salesperson, do I need to access a platform, or do I just need to access the data, like the kind of the database, literally the raw lines of code, which might be what are called like data lakes of information? Like, do I need that application layer? Do I need Salesforce? And so this has been a big conversation around what are systems of record, and in this case, this is Salesforce. And that's where like the difference between the infrastructure layer and then the application. And what can really help is that, and what Salesforce has been doing as an example is basically creating agents that are gonna, that its customers are gonna be using. And so like Salesforce is protecting itself by offering these agents, because if someone else was offering those agents can just totally bypass Salesforce and go straight to the database. Obviously, like it is not as simple because Salesforce still has those switching costs and it takes time to rip it out. But that's kind of like the overall idea that I was talking to.
Got it. Okay. And with all of these changes across all these companies, and how do you kind of like keep up with everything? Because I do feel like a lot of people nowadays, I hear more and more this like term like, oh, I feel overwhelmed. There's so many like products I need to like get smarter on, like everything's changing all the time. I know that of course there's like newsletters, if you have newsletter recommendations or anything. You're actually like in the space and working and like talking to people all the time, so I'm sure that helps. But if you could give people in the working right now like some advice on like how to keep up with everything, like what would you say?
I think, well, I wasn't on Twitter before, but it seems like a lot of the conversation on AI and like kind of where news break first is Twitter, and like a lot of people write pieces on Twitter that is basically like their thoughts about AI, etc. So what I realized is like there's a lot of content out there. What has helped is honestly just literally talking to people in the space, and that's why I think like, a lot of people say, oh, AI is going to replace us all, but it's like, it's those relationships. I actually spend a good chunk of my day getting on calls with other VCs, founders, other funds, like bankers, like people that work at startups, or just even organic conversation with colleagues, etc. And there's no, sometimes I get on these calls and there's no like, oh, we're looking at this company. It's just like, let's catch up. Let's talk about what we're seeing in the market. And they're super helpful to kind of like get sharp and seeing kind of like what they're also witnessing. And then most of the time I kind of come out of that call being like, oh, I just learned this interesting thing about this company. And that's when I kind of go look at that company or that space, etc. But I really very much encourage people to just try to chat with other people, going back to that, very human layer.
Yeah.
Because I feel like there's so many, podcasts and newsletters out there, and definitely you should take the time to read, because a conversation only goes two ways. It's like, if you get on a call and you have nothing to say to someone, then like they're not going to get on a call again. So you definitely want to have your own point of view, and there's lots of substacks, but there's so many, as you said, that like you're sometimes kind of overwhelmed on like, which one should I listen to? Or, and so it's like, it's super informative. Basically, whoever you speak with will choose their top 3 things that they've learned in the space in the past few weeks. And so that kind of helps you kind of filter through.
Yeah. I think it's like kind of ironic, but I like it, where it's like, oh, how do I learn about AI? I like to talk to more humans. That actually might not be a very like common way that people answer that question. So I feel like that's pretty helpful in its own way. And actually, I did want to also ask you, given that you're in this space and talking to people about AI a lot, what kind of tools have you been using that you find like most helpful? If there's any, maybe not just like the tools, but also like in terms of like your workflow, because I think people are always wanting to know, like how, yes, there's Claude and it has like its suite of products, but like how exactly should I implement it into my workflows? You said also at Insight, you guys have like these hackathons for those kinds of things as well. So it'd be great to, I'm like personally very curious on how you use them.
I might say something like that might not be very original, but what I realize is that there's kind of two type of people. There's, well, like the majority of people is like does not use AI as much, and so like just uses ChatGPT and etc. As kind of like a Google search. And then there's the like a minority that is just a coder and is like using 17 different tools. And honestly, like these tools are changing every week. It's like so hard to keep up with, and they're experimenting themselves. And then maybe the next week there's like literally like a new feature that replaces all the work that they put in like the past week to work on whatever feature they were building, which is so exciting. And then I kind of find myself in the middle in the sense of like, I'm not a coder, but I'm not a basic AI user. And what I was really struggling, I was like, where do I want to spend my time? Do I want to, at a certain point, there was almost a frenzy about should I buy a Mac Mini and play around with OpenClaw, which for people that are not as familiar, basically there's it's an open source kind of like AI virtual assistant that someone released on the web, Peter Steinberg actually, and you can kind of chat with it on WhatsApp or Telegram, whatever, and it kind of uses frontier models. It could use Claude or ChatGPT, and it'll help you literally be your agent. But because it's open source and it was kind of like a hobby, there's a lot of issue and security, and it's not as user friendly. But everybody got so excited about the opportunity and started playing around with it. And so like that was my bigger question: is like, what's my ROI on my time? And what I realized, that I was like, you probably like could just use Claude and become a really good Claude power user. You don't need to go build your own like whole like stack. And like a lot of people started like playing around with Claude code, and I was like, in reality, like you can literally become a power user of Claude code work and like set up your own dashboards or set up kind of like your own automated scheduled task and all of that. And my issue initially was like, no one is really talking about how do you do, like no one is teaching that in between, that like not the super basic stuff or not the super complex stuff, but it's like literally it's like, help me save 2 hours a day by kind of like using Cowork. And what then I realized, I was like, what better tool than to ask Cowork itself or Claude? How can, like, if you, because obviously the more you use it, the more it knows kind of your workflow and your habits. It's like asking Claude itself is like, based on what you know about me and my habits and what I do, what are like 5 ways that I could save time in my week? What are 5 ways that I could automate tasks in my week, etc. And the more you play around with it, the more kind of like you become creative, and imagination is kind of your only boundary. That being said, you know, AI cannot replace your thinking, and a lot of the time I get very frustrated. I tend to joke around, but I say Claude is a he when I'm mad at him, and Claude is a she when she's doing a great job. It's like sort of like sometimes it's still literally the way it works is like it's predicting the next word, the next most likely meaning. It's not a rational individual. So sometimes I'm like, why are you being irrational? And I was like, because it's a machine still.
Yeah. So it sounds like maybe then, and that's like a good point of like asking Claude itself, like, oh, how can I use you better? I think that's something I've done in the past, and it's like self-reinforcing and using it. So then, but I guess like outside of those tools, are there other ones that have been really helpful in like automating some of your workflows, or have you pretty much just been using Claude and all of its different products?
I would say I use Claude a lot. I kind of like, I've decided to kind of almost go all in on that rather than using a variety of different products, especially for a lot of people that like work in a corporate environment. It's so much harder to get, make sure that all these products are secure. And so like a lot of the time in your personal life, you can play and experiment with a lot of different products. But in the corporate environment, it takes a little bit longer. And so in reality, like Claude is one of the enterprise kind of safe solutions, and you can actually do so much with it that you don't need the latest cutting edge, whatever product that can add it that 1 extra %. I would say the 80-20 rule. I can get most of my work done with that. Yeah, and I know it might not be very original.
No, I mean, there's so much that Claude is coming up with every week. So it kind of is like the cutting edge in a sense.
I mean, they came out with it today with a whole design workflow, literally like today. And it was so impressive. It was like, will Canvas get wiped away in terms of like what you could like build with it? So I'm so fascinated. And I feel like most people don't even know about any of these kind of like new functionalities.
Yeah, it's interesting. I feel like once you're like really deep in it, because I've been using so many of these tools, it kind of seems like, oh, everyone must be using this. But then I remember seeing some research that like Anthropic and other platforms would put out, which is that like a very small minority of people are actually using these tools at all, and then also like on a day-to-day basis. But of course, that's going to change a lot. I mean, I think we're just getting started. But last few questions, I guess, is like, for one, A lot of my audience actually has been asking, like, do you feel like for banking in specific, banker headcount for like the analyst and associate positions, do you think headcount will reduce over time because of AI? Or do you, obviously we've been in the roles before. We know that with a lot of automated tools like Bloomberg, FactSet, like you still have a lot of work to do all the time. So what's your like take on that?
Definitely. I'd say two main things. And I've witnessed this both when I was at Evercore and kind of like what the thinking was about AI adoption, AI tools adoption, as well as I see a lot right now when I see with my portfolio companies and what are they thinking about using AI the most. It's actually not necessarily about cutting cost. So, cutting people, like obviously you want to like automate workflows, but it's actually about increasing revenue and increasing productivity and basically making you a superhuman and empowering you to like get rid of or like let AI handle like what are like more manual tasks that are needed, but they're not adding value, and letting you focus on what creates value. And I've seen it in banking and I see it with our companies, and it's like that emphasis on like how can we use AI to like increase revenue versus the cutting costs. So like that's definitely a very positive signal. I'd say it's obviously a conversation that we've been having. It's like what is going to happen to those entry-level jobs whose job a lot had to do with doing those manual tasks. Well, first off, I'd hope that like any point in history, like the first computer and like as we went through the revolutions, like lots of jobs were lost, but also a lot of new jobs were created. So I can't imagine it yet, but I'm sure there's going to be, creative distraction. And so like there's going to be so many new jobs coming out. And so like this is definitely a positive. But then the other question is what we were discussing before is like, if you haven't built a model yourself, are you able to, audit a model or challenge its assumptions, etc.? Not really. And I was talking actually recently with some lawyers, and they were like, yes, we could use AI to kind of replace a lot of our associates, but then how are we going to get partners? Because if we don't hire any more associates, how are they going to grow and learn and get to the final level? And so I think what's actually beautiful and hopefully is that you will still have the people that are getting into the entry-level jobs, but their work will look different. They'll be pushed to use AI tools natively from day one, and it will make them power users. And so as they move up the ranks, hopefully, the next generation of management will be very native into it. So I have a positive outlook. Obviously, it's like in the moment, it's like there is uncertainty and it's really tough out there as we're undergoing a transition.
Well, it'll be definitely interesting to see. I have heard some banks, like one of my friends at a bank say that, they're thinking about AI as they're like thinking about headcount in the future. But I do think at the junior level, there will, as you say, there will always be a need for someone doing the junior level work, and also like to build all the reps so that eventually they become a senior and kind of carry on those tasks as an MD. And so the last question I had for you was kind of more of just like a something for general advice, essentially. So if you could kind of think back to when you were just starting out college, let's say, or in high school, and you could talk to young Alessia and kind of give some advice to them, or give advice to her, like what would you tell her?
I'd say two things. The first one is path doesn't need to be linear. Like life is not linear. I think young Alessia had kind of like this 5-year plan, this 10-year plan, and kind of like had it all planned out. And it's like, you will meet people, you will change jobs, you'll change cities, you'll change countries, and you'll collide. And it's beautiful. It's like, I think about it from like a science perspective, you'll collide into other people's lives, and like that will change your trajectory and your course. And so just really embracing that. I was talking to friends recently about this research paper that's saying if you're static, your chances of kind of like meeting other people is lower. So if you have the same jobs, like live in the same city for your entire life, go to the same cafes, to the same restaurants, same gym. If instead you're moving, your kind of surface level increases, and the opportunity to kind of like meet new people, and that will open so many doors. And so that's the first thing. And so kind of like trust the process, and it can be very scary. But like kind of very much like everything happens for a reason, and like you're taking a detour, but in reality, it might just open a completely different path. So like that would be the number one thing. And I think once I realized that, going through, the adversities of life, because not just work-wise, but also personal, that was a great learning, I'd say, as you go through life for everything. And then the second one is just kind of being curious and keep asking the questions. I think a lot of people, you get comfortable and you like your job, whatever, and you kind of like get comfortable in your routines, and you don't really go out there and meet new people and ask questions. And then you only do that when you need to change job or you need something. And so like that makes it very transactional, like, and that makes it also very like lots of pressure on like, oh, I need to figure it out now, versus like if you continuously are kind of open and kind of like a yes theory in terms of like meeting and taking those like genuine connections, then whenever you're in need, you will have already kind of done the work, and you'll thank your past self for doing that. And very much kind of like when you're entering, and meeting someone, first question should be like, how can I help this person? How can I be of value? Versus like, how can they be helpful for me? I think that goes a long way.
Well, I think that's a great way to end the interview. And thanks so much for making the time. As we kind of talked about throughout this entire chat, I'm like very interested in like the whole AI space and how it's affecting everyone. And especially for our audience, they're always asking about how it's affecting those like working in finance. And I think you also reminded me of like some important lessons I learned myself with that last answer. Like like back then, like left banking, like started my first business, and then life went a very different direction than I expected. And that led us kind of like talking now. So that's kind of like nice in its own way. And I think like it is a very important lesson I learned too. Like you always have a plan, but life will never let you kind of like stick to that plan. But what ultimately results is still something that can be very like beautiful in its own way. So yeah, thank you. Just want to say thanks again so much for making the time. And we'll definitely be in touch as we move forward.
Definitely. Thank you so much, Ben. It was great chatting with you for the past hour. And I sometimes get a little too nerdy when I talk about AI, but it's like just a fascinating time.
Great. Thanks so much.
Thank you.
All right, so that concludes the episode, and hope you all enjoyed it. As you can see from Alessia's story, banking builds the foundation, but what you do after it is the real game. The technical skills matter, but it's even more important to stay curious and keep expanding your world. And that's the through line of this whole conversation for me. Thanks as always for listening to Rare Liquid. If you want to support this podcast, please leave us a review because it genuinely helps, and see you in the next episode.